Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at airline stocks in the wake of today's profits warning from Ryanair, the second such warning in 2 months. And if we look on the daily chart, you can see how there was an unfilled gap to the downside at the beginning of September with the first warning from the not quite that popular airline. And we've now matched that with another unfilled gap to the downside to start November. This is perhaps more serious. The second unfilled gap tends to be rather more deadly than the first in technical or charting terms, especially as in this case it's below the 200-day moving average at €6.36. The trade on offer here for short-term players is really that while below the September support at €5.76, we're looking for further downside towards the floor of a June descending price channel at €4.70. So you're risking around 40 cents there to try and make as much as 70. So a reasonable risk reward prospect. Shares are oversold at the moment. The RSI is 24, but it looks as though there's enough, there will be enough momentum on the downside to drag the shares lower. Ryanair's unfortunate news today also took shares of its rival EasyJet down as well. Not down as much, down 3% as opposed to 11% of Ryanair. But we have an unfilled gap to the downside through the 50-day moving average at £12.90. And this suggests that at least while we're below that 50-day line, we're going to have to test the 200-day moving average at £12. Perhaps go a bit lower as well. The low in August was down to 11.69, and there may have to be tests and probes in that zone over the next month or two, which takes us back actually to where the sort of probing that we saw from June onwards under £12. So a little uncertain there for EasyJet. Probably the earliest buy signal there would be an end of day close back above the 50-day moving average. Finishing off with the sort of the original carrier here, the flag carrier, International Consolidated Airlines, and you can actually see that there seems to be the pendulum swinging away from the discount players back to the flag carrier in terms of the share price rise that we've seen over the year, especially since April here. Massive rally here for International Consolidated, and it looks as though even though we are sort of consolidating literally at the moment, we have the prospect of a new leg to the upside over the next few weeks. Probably the best buy trigger here would be an end of day close above the 50-day moving average, sorry, the 10-day moving average at £3.53. We're well above the 50-day moving average at £3.31, and that would take the shares back to a sort of end the recent bull run at £3.80, £3.90 as a December target. So an interesting divergence there between the different types of airline, and one which is well worth watching. That's it for me. See you again next time.